22 Assets That Are Making People Rich, a comprehensive guide for aspiring investors. Welcome to a deep dive into the world of wealth-building assets. If you're an aspiring investor, understanding the types of assets that can generate wealth is crucial. In this comprehensive guide, we'll explore 22 powerful assets that are helping people all over the world build financial freedom. By the end of this video, you'll have a clear understanding of how each asset works and how you can start building your own wealth today. We all want to build wealth, right? But knowing where to start can be the hardest part. Today, we're diving into the assets that can set you on the path to financial freedom. This isn't about getting rich quick. It's about understanding the long game. So, grab your notebooks and let's get started on this journey to building wealth together.
Real estate is a cornerstone of wealth building. It's a tangible asset. You can see it, touch it. The real magic happens when it generates income. Rental income creates passive income. Rents increase over time, boosting cash flow. Real estate tends to appreciate long-term, and don't forget the tax advantages.
Now, let's shift gears and talk about bonds. Bonds offer stability and predictability, crucial for a balanced portfolio. When you buy a bond, you're lending money to a government or corporation. They promise to pay you back the principal plus interest over time. Bonds are safer than stocks, ideal for risk-averse investors.
All right, let's talk about stocks. Now, when you buy a stock, you're essentially buying a tiny piece of that company. It's like owning a little slice of Apple or Tesla. And the cool thing is, as that company grows and becomes more profitable, the value of your stock goes up too. You're literally participating in their success. Now, I know what you might be thinking, but Graham, isn't the stock market risky? And yeah, there's definitely some risk involved. The market can go up and down in the short term, but historically, over the long term, the stock market has consistently trended upwards. That's why it's so important to think long-term with your investments, just like I do with real estate.
Now, let's say you want to invest in stocks, but you don't want to put all your eggs in one basket. That's where mutual funds and index funds come in. Think of these funds like giant baskets of stocks. Instead of buying individual stocks, you're buying into a fund that holds shares in hundreds, even thousands of companies. This is what we call diversification, and it's crucial for minimizing risk. Because even if one company in the fund doesn't do well, you've got all these other companies to potentially pick up the slack. And the best part? Mutual funds and index funds are super accessible. You can start investing in them with as little as a few bucks, which is a whole lot easier than trying to buy individual shares of hundreds of companies.
Now, I know some of you might be thinking, Graham, stocks and funds sound great, but I'm just not comfortable with that level of risk. And hey, I totally get it. That's why it's smart to have some money in super safe options, like high-interest savings accounts and CDs. These might not make you rich quick, but they offer something invaluable peace of mind. You know exactly how much interest you're going to earn, and your money is federally insured. Now, I'm not talking about your regular old savings account that earns you like 0.01% interest. I'm talking about high-yield savings accounts and CDs that actually offer a decent return on your money. While it might not be as exciting as investing in stocks or real estate, remember, slow and steady wins the race. These safe havens are perfect for your emergency fund or for money you might need in the near future.
Let's talk about cryptocurrency. Bitcoin, Ethereum, Dogecoin. You've heard these names. Early adopters made fortunes, but it's incredibly volatile. One day it's up, the next it's down. Even seasoned investors get queasy. Is it a good investment? It depends on your risk tolerance. Never invest more than you can afford to lose.
Let's move on to something a little more, shall we say, tangible gold and precious metals. For centuries, gold has been seen as a safe haven asset. When the economy takes a downturn, people flock to gold because it tends to hold its value. It's like the financial world's security blanket. But gold isn't just about fear and uncertainty. It's also a hedge against inflation. You see, when the value of the dollar goes down, the price of gold tends to go up. So, by owning gold, you're essentially protecting your purchasing power over the long term. Now, I'm not saying you should go out and convert your entire net worth into gold bars, but having a small allocation to gold, whether it's physical gold, gold ETFs, or even mining stocks, can add some stability and diversification to your portfolio. Just remember, gold doesn't generate any income. It just sits there looking shiny. So, it's all about capital appreciation with this one.
Now, let's talk about something a little different. Commodities. These are the raw materials that make the world go round. Oil, natural gas, coffee, corn, you name it. And just like any other asset, you can invest in them. Why would you want to do that? Well, for starters, commodities can be a good hedge against inflation. When the price of everything else is going up, so too does the price of these essential goods. Commodities can also add some much-needed diversification to your portfolio. You see, when stocks and bonds are zigging, commodities might be zagging. That's because they're influenced by different factors, like supply and demand dynamics, weather patterns, and global events. Now, I'm not saying you need to become a commodities trader overnight, but having some exposure to this asset class through ETFs or mutual funds can be a smart move for long-term investors. Just remember to do your research and understand the risks involved.
Let's talk about an asset class as old as time itself, farmland. You don't have to be a farmer to see its value. Farmland is tangible and essential. People always need to eat. This demand gives farmland intrinsic value. The global population is growing, meaning more mouths to feed. Demand for food and farmland will keep increasing. Farmland is finite and potentially appreciating. Investing in farmland can provide consistent income. Farmland has shown steady appreciation, acting as a hedge against inflation. Let's talk about intellectual property, specifically patents. If you've ever had a groundbreaking idea, listen up. A patent grants you exclusive rights to your invention. It protects your creation and allows you to profit from its success. You could license your patent for royalties or sell it outright. Getting a patent involves a rigorous application process and legal fees. But if you have something truly innovative, a patent can be your golden ticket. Turn your creativity into a tangible asset that generates income. Let's talk branding. Because in today's world, a strong brand is worth its weight in gold. And how do you protect that brand? Trademarks. Think of a trademark as that little symbol, that TM or registered trademark, that you see next to a company's name or logo. It's more than just a symbol, though. It's a powerful tool that protects your brand identity and sets you apart in a crowded marketplace. Imagine you've poured your heart and soul into building a business, creating a product that everyone loves, and your brand becomes synonymous with quality and trust. That, my friends, is invaluable. A trademark legally protects your brand name, logo, slogans, and even unique packaging, preventing others from capitalizing on your hard work. But here's where it gets interesting. A trademark isn't just about protection, it's also a valuable asset that can be leveraged to generate income. You can license your trademark to other companies, allowing them to use your brand name or logo on their products or in their marketing materials. This can create a steady stream of passive income for you. And if your brand becomes incredibly successful, well, you can even sell your trademark to another company for a significant profit. Think about the value of brands like Apple, Nike, or Coca-Cola. Their trademarks are worth billions. So, as you build your business or even just brainstorm ideas, remember the power of a strong brand and the importance of protecting it with a trademark. Let's talk branding. A strong brand is worth its weight in gold. And how do you protect that brand? Trademarks. Think of a trademark as that little symbol, that TM or registered trademark, next to a company's name or logo. It's a powerful tool that protects your brand identity and sets you apart. Imagine your brand becomes synonymous with quality and trust. That, my friends, is invaluable. A trademark legally protects your brand name, logo, slogans, and packaging. It's also a valuable asset that can generate income. You can license your trademark to other companies. This can create a steady stream of passive income. And if your brand becomes incredibly successful, you can sell your trademark for a significant profit. Think about the value of brands like Apple, Nike, or Coca-Cola. Their trademarks are worth billions. So remember the power of a strong brand and the importance of protecting it with a trademark. All right, let's talk about copyrights. You know, those things that protect your favorite songs, that online course you took to level up your skills, or that book you just couldn't put down. They're not just for big-time artists and authors, guys. Copyrights are a powerful asset because they grant you ownership of your original work. This means you have the exclusive right to reproduce, distribute, and profit from it. Imagine writing a hit song in your bedroom studio that blows up on Spotify, or creating an online course that thousands of people sign up for. That's the potential of copyrights. And the best part, they can generate passive income for years to come. Every time someone buys your song on iTunes, enrolls in your online course, or purchases your book, that's money in your pocket. So, don't underestimate the power of intellectual property. If you're creating something original, make sure you protect it with a copyright. Now let's talk about royalties. Imagine getting a check in the mail every month just because you own the rights to something valuable. That's the beauty of royalties. They're like passive income on autopilot. Royalties are payments made to the owner of intellectual property whenever it's used. Create something valuable and collect those sweet, sweet royalties. Let's talk about something abstract but powerful: brand and goodwill. You can't touch them, but they can be worth billions. What do Apple, Nike, and Coca-Cola have in common? Their brand recognition sets them apart. You see that Apple logo and you think sleek design, innovation. That's brand power. A strong brand builds trust, loyalty, and higher profits. Goodwill is the value of a company's reputation. It allows businesses to command higher prices. Building brand and goodwill takes time but pays off. A good reputation is more valuable than money. In today's market, it couldn't be truer. Imagine skipping the whole reinventing the wheel phase of starting a business. That's the beauty of franchises. You're buying into a proven system with brand recognition and a loyal customer base. Think about it: McDonald's, Subway, Anytime Fitness. They're everywhere for a reason. It's not a guaranteed path to riches, but it reduces your risk. You get brand recognition, operating procedures, and support. Find the right franchise, do your research, and it can be a fantastic way to become a business owner.
Owning a business, whether it's a small startup or a well-established company, is challenging yet rewarding. There's no set salary, but the ceiling is limitless. You're in the driver's seat, calling the shots. It's about creating something you're passionate about, solving a problem and generating cash flow, but it's not for the faint of heart. It takes hard work, dedication, and risk tolerance. You'll face challenges and setbacks, but those moments shape you. Building a successful business takes time. It's a marathon, not a sprint. Adapt and evolve along the way.
Let's talk about an asset class that often flies under the radar: equipment. Not just your fancy camera gear. Think bigger construction equipment, farming machinery, specialized tools, even bouncy castles. These assets can generate serious passive income. Rent out a bulldozer for a construction project, or a tractor for harvest season. You've got the asset, they've got the need. It's a win-win. Identify high-demand equipment that's too expensive to buy outright. Provide a valuable service while generating income. Maintain it properly, and it can generate income for years. Of course, there are risks involved. Equipment can depreciate and break down. But with research and proper management, it can diversify your income streams. Now, let's talk about an asset that doesn't show up on a balance sheet, but is absolutely critical: people. That's right, investing in talent is one of the smartest moves you can make. Think about it. Every successful business out there is built on the backs of talented, hard-working individuals. They're the ones driving innovation, coming up with creative solutions, and ultimately pushing the company forward. When you invest in your team, you're investing in the future of your business. This means providing them with opportunities for growth, offering competitive salaries and benefits, and creating a positive and supportive work environment. Remember, happy and fulfilled employees are more productive, more engaged, and more likely to stick around for the long haul. And that, my friends, is a recipe for long-term success. All right, moving on to something a little different, peer-to-peer lending. Platforms like Lending Club and Prosper have opened up a whole new world for investors, allowing you to become the bank, essentially. Here's the deal. You lend money to individuals or businesses through these platforms, cutting out the traditional financial institution middlemen. In return, you earn interest on your investment, often at rates higher than what you'd find with traditional savings accounts. Now, it's important to remember that with higher potential returns comes higher risk. It's crucial to do your due diligence, assess the borrower's creditworthiness, and diversify your investments across multiple loans to mitigate that risk. But if you're comfortable with a bit of risk and are looking for a way to potentially earn higher returns on your money, peer-to-peer lending could be an interesting avenue to explore.
Let's dive into the world of art and collectibles. This is an asset class that's captivated investors for centuries, and for good reason. Think rare paintings, vintage cars, antique furniture, even rare sneakers. These items often appreciate in value over time, sometimes significantly. Now, it's not just about buying something you think looks cool. Investing in art and collectibles requires a certain level of expertise and a whole lot of patience. You need to understand the market, know how to spot valuable pieces, and be prepared to hold on to your investments for the long haul. This isn't a get-rich-quick scheme. It takes time for these assets to appreciate, and there's always the risk that their value could decrease. But if you're willing to put in the work and are passionate about the items you're investing in, art and collectibles can be a fascinating and potentially lucrative addition to your portfolio.
Let's talk about an asset class that's exclusive and often shrouded in mystery private equity. It involves investing directly in private companies or buying out public ones to take them private. Imagine being an early investor in SpaceX or a promising tech startup. That's private equity. But it's not for the faint of heart. It comes with higher risks. These investments are illiquid, meaning you can't easily cash out. You're in it for the long haul, often 5 to 10 years or more. The potential for outsized returns is why investors consider private equity. Higher risks can lead to significant rewards if the investment pays off. Private equity firms aim to generate high returns by actively engaging with their investments. They might improve operations or take the company public, aiming to sell at a higher price. Let's talk about a strategic advantage that can make any asset more valuable: first-mover advantage and proprietary business models. Being first to market or having a unique approach can be a game changer. Think about Amazon or Tesla. They disrupted industries by resonating with consumers. First-mover advantage lets you define the market and build loyalty. It's also about having a proprietary business model that sets you apart. This could be a patented technology or a unique process, or even a powerful brand identity. Create a moat around your business to make it hard for others to replicate. Secure patents and build a strong brand to create barriers for competitors. This allows you to command premium pricing and generate sustainable profits. We've covered a lot of ground, from real estate and stocks to private equity. Building wealth isn't about chasing trends or getting rich quick. It's about a strategic approach that aligns with your goals and risk tolerance. The 22 assets we've discussed offer diverse opportunities. Diversify your portfolio to mitigate risk and maximize success. Your journey starts with education. Learn about different asset classes. Seek guidance from experienced advisors. Start small, stay consistent, and invest in your future. With the right